In a major victory for the cryptocurrency industry, a federal appeals court has ruled that the SEC's rejection of Grayscale's Bitcoin ETF application was arbitrary and capricious. In a recent court decision, the Grayscale company's proposal for a Bitcoin exchange-traded fund or ETF received a favorable verdict, despite the Securities and Exchange Commission's or SEC apprehensions regarding potential price manipulation. This ruling has the potential to bring about a substantial change in the landscape of Bitcoin investment, as it directly challenges the SEC's decision-making procedures and their role in regulating cryptocurrency-related financial products. This development is likely to draw heightened attention from both investors and regulatory authorities, creating discussions on the future of Bitcoin and its place within the traditional financial system. The appeals court said the SEC's decision to reject the Grayscale Bitcoin ETF application was arbitrary and capricious in its ruling. Bitcoin experienced a significant surge, marking one of its most notable upticks in recent history. The excitement stems from a recent U.S. court decision that sided with Grayscale over the SEC. If you haven't been keeping up with this, allow us to bring you up to date, as this is undeniably one of the most significant developments in the history of Bitcoin. This whole narrative involves two contrasting elements. On one side, we have the Grayscale Bitcoin Trust, denoted by the ticker symbol GBTC, which was established in 2013. They also oversee the largest Bitcoin fund, boasting nearly $17 billion in assets under management, according to Grayscale's reports. While we know that nearly $17 billion is indeed a huggy sum, it pales in comparison when juxtaposed with larger investment entities. For instance, Vanguard, a financial giant, manages an ETF known as VDOO, which represents the Fortune 500 companies in the stock market. This single fund commands roughly $1 trillion in assets under management, making it approximately 54 times larger than the most prominent Bitcoin fund. Like, if you're interested in gaining access to this Bitcoin fund and investing in it, you can typically find it directly through your brokerage. What GBTC essentially offers is the opportunity for investors to purchase shares in a trust that holds Bitcoin. But there are several drawbacks to consider. First, investors do not directly own the underlying Bitcoin. Instead, they hold an IOU that tracks the price of Bitcoin, albeit not always on a one-to-one basis. Also, there are complexities involving premiums and discounts to the net asset value, market inefficiencies, occasional liquidity issues, and a relatively high fee of around 2%. Consequently, purchasing GBTC may not always provide an accurate representation of the true value of Bitcoin, making it less than ideal for the average person seeking exposure to the cryptocurrency. That's precisely why Grayscale aims to implement a conversion, making it more accessible and comprehensible for the average individual to buy and hold Bitcoin. They aspire to simplify the process, aiming to become a key player in this game. Grayscale's lead counsel Donald Verily Jarrett told the court in March that a spot Bitcoin ETFs would better protect investors because it would give them the benefit of CME oversight of the market. Currently, Americans mostly invest in Bitcoin via less well-established or unregulated exchanges. The SEC says Grayscale lacks data to determine whether the CME Futures Surveillance Agreement could also detect potential manipulation in the spot markets. Now, in this scenario, the SEC holds a cautious stance toward cryptocurrencies, particularly Bitcoin. Grayscale's perspective is rooted in a belief that strong regulations should be imposed on Bitcoin due to concerns about price manipulation within the crypto space. It's important to know their intent isn't necessarily malevolent. Rather, they aim to safeguard amateur investors. To do this, the SEC has consistently denied applications from companies seeking approval for a physically backed Bitcoin ETF. The story started last year in June when Grayscale submitted an application for their own Bitcoin spot ETF, aiming to convert their Grayscale Bitcoin Trust. However, the SEC denied their request, which led Grayscale to question why the SEC had approved riskier assets while rejecting their proposal. The SEC's argument centered on the lack of adequate reporting standards and safety measures for a spot Bitcoin ETF, a point with which Grayscale disagreed. Consequently, Grayscale took the bold step of suing the SEC, a move that reflects significant courage in challenging the federal government. Now, with the court siding with Grayscale, the implications are nothing short of profound. Let's get into why this ruling is a game changer for Bitcoin investors. For years, the SEC had approved only futures-based Bitcoin ETFs, leaving investors with a sense of unease. The approval of these futures-based ETFs sparked a flurry of questions about the SEC's decision-making process. Grayscale argued that if Bitcoin's price could be manipulated, as the SEC feared that approving a futures-based version of it made little sense. To illustrate the significance of this ruling, consider a hypothetical scenario where you're a cryptocurrency enthusiast looking to invest in Bitcoin. Historically, where options were limited to futures-based ETFs which don't offer direct exposure to the underlying asset. Now, with the courts favoring Grayscale, there's a possibility of a spot Bitcoin ETF. This means you could potentially invest in actual Bitcoin, not just a derivative, offering a more direct and transparent way to participate in the cryptocurrency market. Moreover, this decision forces the SEC to reevaluate its stance on cryptocurrency regulation. It underscores the need for more thoughtful and nuanced approaches to digital asset oversight, recognizing that cryptocurrencies like Bitcoin are here to stay. So what's currently happening is undeniably one of the most important developments for Bitcoin in the past decade. We'll now get into what this means for Bitcoin. Grayscale secures legal victory against SEC. Regulator mandated to reevaluate Bitcoin ETF application. The denial of Grayscale's proposal was arbitrary and capricious because the commission failed to explain its different treatment of similar products, wrote Judge Naomi Rao in the court's opinion. The court's decision revolved around a critical assessment of the proposed Grayscale Bitcoin ETF and its similarity to approved Bitcoin futures ETFs. The panel of judges determined that Grayscale successfully demonstrated the material similarity between its proposed ETF and the existing Bitcoin futures ETFs. This similarity hinged on two key factors. The court recognized that the underlying assets in Grayscale's proposed ETF, namely Bitcoin and Bitcoin futures, exhibited a high degree of correlation. This means that changes in the price and behavior of one asset, such as Bitcoin, are closely tied to the other Bitcoin futures. Another important point was the surveillance sharing agreements that Grayscale had with the Chicago Mercantile Exchange, or CME. The court found that these agreements were identical to those of the approved Bitcoin futures ETFs. These surveillance sharing agreements are designed to monitor the cryptocurrency market for any fraudulent or manipulative conduct. Based on these observations, the court concluded that the SEC's decision to reject Grayscale's filing was arbitrary and capricious. In essence, the SEC failed to provide a reasonable explanation for why owning actual Bitcoins by Grayscale would impact the CME's ability to detect fraudulent or manipulative activities in the Bitcoin market. This lack of a clear rationale for the rejection of the ETF proposal was a key factor in the court's decision. In simpler terms, the court found that Grayscale's ETFs was essentially on par with existing Bitcoin futures ETFs in terms of its structure and safeguards against market manipulation. The SEC's refusal to approve it was deemed unjustified, marking a significant victory for Grayscale and potentially opening the door for a spot Bitcoin ETF that could offer investors a more direct route into the world of Bitcoin investments. The SEC's case lacked sufficient evidence to demonstrate how Grayscale's application for a Bitcoin ETF significantly differed from the futures-based funds the agency had previously approved. The SEC failed to convince the panel that the underlying spot market could be inherently riskier for investors. Jennifer Rosenthal, a spokesperson for Grayscale, stated, "This marks a significant milestone for American investors, the Bitcoin ecosystem, and all those advocating for Bitcoin exposure with the added safeguards provided by an ETF." The immediate aftermath of this court ruling leaves several important questions unanswered. Here's what we can expect in the coming days and weeks. Both Grayscale and the SEC have a 45-day window to decide whether they want to appeal the ruling. This decision will be a critical next step. If either party chooses to appeal, it could lead to further legal proceedings, potentially involving the U.S. Supreme Court or an en-banc panel review. The outcome of this decision will greatly influence the trajectory of the case. As of now, the SEC has not provided an official response or indicated whether they intend to appeal the ruling. Their stance will play a pivotal role in determining the future of Grayscale's ETF proposal. If neither party appeals, or if the appeals process concludes in Grayscale's favor, the court will specify how its decision should be executed. This could involve instructing the SEC to approve Grayscale's ETF application, essentially giving it the green light for launch. However, the court might also direct the SEC to revisit the application, potentially allowing the regulator to consider other grounds for approval or rejection. The ultimate outcome of this legal battle will depend on the decisions made by Grayscale and the SEC in the coming weeks, as well as any potential further legal proceedings. A victory for Grayscale in its battle with the SEC has potential implications for other firms seeking approval for spot Bitcoin ETFs. Several prominent financial institutions and asset management companies, including BlackRock, Fidelity, WisdomTree, VanEck, Bitwise, and Invesco, have filed applications for spot Bitcoin ETFs this year. Here's what this ruling could mean for them. While the ruling does not automatically compel the SEC to approve other Bitcoin ETF applications, it does set a precedent. The court's rationale in this case could serve as a reference point for evaluating the merits of future applications. Other applicants may argue that their ETFs are similarly structured and equipped with safeguards against manipulation, aligning them with the principles laid out in the Grayscale case. Also, many of the firms seeking approval for spot Bitcoin ETFs propose collaborations with cryptocurrency exchanges like Coinbase to monitor and police trading in the underlying Bitcoin market. All in all, while the Grayscale victory does not guarantee automatic approval for other spot Bitcoin ETF applications, it does provide a roadmap and a potential shift in the regulatory landscape. Firms pursuing these ETFs may find encouragement and a basis for their arguments in this ruling. The SEC's decisions on these applications will ultimately depend on a variety of factors, including the specific details of each proposal and the evolving regulatory environment for cryptocurrencies. Investors and industry observers will be closely monitoring how this ruling influences the SEC's stance on spot Bitcoin ETFs in the coming months.